Guys, it is Ronnie. It's Thursday evening, and I'm just coming to you with a market recap and just kind of the action over the past couple of days. Haven't had a chance to do an evening video in a couple of days, so I wanted to make sure that I took some time today to go over some things that are happening now with the charts as well as some earnings plays because we are coming into the heart of the second quarter earnings season, and there have been some big moves already as a result of earnings. And so we're going to take a look at some earnings coming up um, tomorrow and maybe one big one that took place this evening in Netflix. So let's go ahead and start with the overall market. This is the S&P 500 chart. Um, and as you can see, it has broken through all of the resistance levels that we have been speaking about. So we've been talking about this purple line, then this gap fill, this gap rather, the gap fill over here at this area, this descending trend line. And so this was kind of the last area in some of the conversations that we've been having that would be a potential area of resistance. So the next level I'm looking at here, and so actually this breakout is pretty bullish. So we're going to take a look and see if the market actually has some more legs to the upside. I mean, it really does look like it kind of came down, made a little W pattern, bull flagged, and has now broken out. So it has to really stay kind of above the purple trend line, of course, as well as even above this shorter term trend line would be more bullish. And then eventually it's going to have to get over this prior high, which, you know, is at 32.33, it looks like. So 32.33, you know, is kind of, if it can stay over that, you see it already came up here twice. It's come up 2 days, 3 days ago, and then now yesterday it also came up and tapped that area. So it's a pretty, I mean, if it comes up there again, it has a pretty good chance of breaking through this trend line right here. Um, and then if it does, we'll have to think about it as a bullish play. Honestly, you can see here it actually pierced it yesterday with this high being 32.38. So today's action, even though it was slightly bearish towards the end of the day, it still, really hasn't crossed below yesterday's low. Definitely isn't back into this range right here the past choppy a week or so. And so we really can't think of it as bearish unless it crosses back down below this range. So these lows here, and this is the range I'm speaking about. So below that range there, we could think about potentially getting short again, and it really has to get below this area here, all of these bars, as well as then below the purple bar. And then, the next target is the prior low here, and then this former prior low at 29.66. So really, I mean, even if you check it out on a weekly chart, it is breaking out of that area. You can see right here. And this circled area is that entire consolidation over the course of the past week. So came down in March, went back up, touched, this area, which was a lower high from the prior January-February high, came down, made a little bit of had some choppy action past few weeks, and has subsequently pushed up to this descending trend line and is now above it. So in actuality, the next target here to the upside would be potentially this this gap from the February 24th, the week of the 24th, that high, which is 32.59.81. So there is a blue line here kind of defining where that gap starts. And if it does cross above that, the next target is the fill of this gap, which is up here at 33.29, the fill of this gap. So that's what we're looking at for the upside if it continues to show strength. We have a couple of targets here. You know, first is this gap. If it can get above this pivot right here, and then filling the gap up to the um, February high, right? Up to the low of that last bar in February uh, at the high. So we have some targets to the upside. Of course, you know, it's really surprising to me that it's made it up this far and continues to push higher. But I mean, the market's going to do what it's got to do. It's not necessarily operating in reality right now. I mean, it could potentially, uh, you know, next week come back down, you know, and continue to chop in this range, as opposed to pushing straight up. But if it does push up, you've got some targets. If it gets, and again, we're looking for it to get above this high right here. So we would like it to get above this high before before we put any long trades on. Like that is kind of, you know, you could have traded it above this trend line. Of course, that could have been the aggressive trade, like trading it at the breakout. But then the more conservative trade is to look for confirmation of breaking out above this prior high. So if it breaks out there, I mean, you've got, you know, this 3260 and then the 3332 as are the next targets. So you know, just think about that for the upside in the SPX in the index. But if you take a look at the other indexes or indices, let's take a look at the NASDAQ. Much different story there, a lot weaker this week than it was in prior weeks. And, you know, whereas the S&P has a green bar and it has a kind of a hammer pattern like this for this week, the NASDAQ is actually looking like a reversal bar. And so this was actually, you know, leading the market. As you can see, it's at all-time highs. Even this week, it's hit an all-time high but it is kind of pulling back. So tomorrow will be a key for the Nasdaq too. If it manages to stay, you know, red, if the weekly bar manages to stay red, or doesn't retrace back a lot of this move, it could potentially be signaling a change in the trend for the Nasdaq. I mean, it is kind of a rotation then out of tech names into, you know, industrial names, and other safer havens that have not been participating in this market recovery. So, you know, things that have kind of been the dogs of the market are getting some love right now. It's like a catch-up trade a little bit. So here is the Dow. I'll use the diamonds as the chart. It's similar to the S&P 500, except it still hasn't crossed above that trend line yet. So you can see if we were to draw a trend line from those highs in February, it's still under it. So again, you know, the S&P's crossed up there, but the Dow hasn't crossed above it yet, nor has I don't believe the Russell. Let's check the Russell. Yeah, same thing with the Russell, still underneath it. So we'll have to see kind of what happens with the Russell and the Dow and if they actually end up catching up and breaking through this trend or if they roll over and then take the S&P with it. Earnings will, like I said, be a really big catalyst for a lot of these moves. So let's take a look at some of the earnings names coming up. I'm going to go ahead and switch my view so you can see a little bit better on these charts. But yeah, so we have a couple of different names that that are reporting earnings this week or have reported earnings already. So if you take a look, let's start with Netflix. It actually reported tonight and had a huge miss apparently, and I don't know whether it missed or not, but it definitely missed on the stock performance front. So you can see it closed at 527 and went all the way down to 449 in the aftermarket or after hours, and is still has recovered a little bit up to 483, which is a big recovery actually, a 30 point recovery. Um, and is kind of staying right here for now. So Netflix on the whole is in kind of the middle of its range here. It was close to the top of its range earlier in the week, which is, we have this trend line from 2017, and then you've got this other lower trend line here, some pivots. It was inching up there. So, and it made a huge reversal pattern already, and so now it is actually back to around the bottom of this weekly spike, right? So you see um, the bottom of this bar for this week so far is about where the stock is right now. So tomorrow, I would anticipate some more weakness in Netflix, especially if the market is weak as well. I would be looking for shorting this stock underneath the low of this week's bar. So it would be this pivot right here at about four. What is the low? Actually, the low is 490.49. So if it can stay below 490.49, let's go ahead and put the exact number in there to be precise. 490.49. If it can stay below that, oops, 490 490.49. If it can stay below that in the morning, um, you know, we'll look for continued maybe rollover down to the range of 460. So back down to this low here, not the spike low, but this low before the spike. So that's what I'll be looking for in Netflix as a potential opportunity to short it, back down to about the 460 area, which is also a prior high here, and then this kind of a pivot right here. Let's go ahead and put it in there. So around that area. So just to move from 490-ish down to 460-ish. If it stays here and continues to go down, and if it's weak in the morning, maybe not be there may not be a trade, because the only other, references that you have here are, let's look at the daily on this guy. Yep, the only other references you have are this 20 moving average, the 50 moving average, and that 50 is at 453. And then of course, you have some of these other pivots, but it's been pretty strong. So I'm not thinking it's going to come all the way down, back down to this trend line or any of these pivots. I think really, in reality, this is probably the lowest it's going to go, the 50 moving average. So 453. But if it starts low, if it's already, weak in the morning and already moving past these targets, I'm definitely not getting into it. Now, if it happens to open strong tomorrow, there's really no trade for me because of the way it's acted here. It's kind of a big reversal pattern, trying to get back up and then basically gapping down to around the 480 area. What is that? It's just below the 20 moving average. So 20 moving average will also be a good indication. If it could stay below that, that'll be a good sign for a short too, down to this pivot. So that's Netflix. A couple of other stocks that did report this week. J.P. Morgan financials are reporting this week, and it's actually a mixed bag. Some of the financials have done just fine. Some of them have not done fine at all. So you've got here J.P. Morgan. Let's remove this arrow. I don't know what these are here for. All right, so J.P. Morgan reported a couple of days ago and actually had a mixed report, and you can see that. Let's see. Here's the day it reported. It spiked up in the after hours or pre-market, and then on the open kind of went down, came back up, and it's just super choppy. So there was really no trade in J.P. Morgan. However, it's held up pretty well considering the financials. They're not giving guidance really, and it's an interesting time for them because it's some people are cutting dividends. They're not giving guidance. Like Wells Fargo here actually reported 2 days ago as well, and you see it had a really weak day. It opened very weakly after its earnings report. However, you can see it gained all that back, and then some. It's almost back to actually it was a little over where it was before the earnings report. So that was a good long trade if you had been able to take that trade off the open. I did not. But Wells Fargo, had some pretty bad earnings, but still, they're so low, these financials, that they are just being bought up as an opportunity for profit going forward because they're so down in the dumps. So that was JP Morgan and Wells Fargo. We talked about Netflix. We'll talk about some other earnings. Let's just really quickly, here's the Market Watch tab. You can kind of take a look and see who's reporting in this tab. This is in TD Ameritrade and TOS. So we have a few earnings in the morning pre-market, but nothing like really, really big. I think Netflix is perhaps the biggest one tomorrow, and then aftermarket it's Friday, so not too much in the aftermarket. We've got Ally Bank, I think. Can't really see too much else. So we'll revisit again next week because next week there are considerable number of earnings as well. So we'll talk about that next week. But right now we'll finish going over kind of um, our market overview and some of the trades that we've been talking about and potentially, um, you know, adding to, getting out of, whatever. So let's start with gold and silver. So gold, here we'll open the futures up. Gold is actually still holding up. I mean, it was a little weak at the end of the day today. Just with the market volatility, it's been pretty choppy and was weak actually towards the latter part of the day today. But it's still above our 1789 breakout. So we're still holding on to gold. If I get another opportunity down in this area, I definitely will because the original breakout in gold was above the trend line here, and then it has also crossed. You see, this is the original breakout here back on June 22nd, as it broke above that like short-term trend line there, a little wedge, and then the next breakout was over the 1789.50 high, which it did make, and it's just kind of retracing back to that area. It's got the 20 moving average here at 1791. It's got the 50 moving average at 1753. So technically, it could come all the way back down. As long as it doesn't cross down back below this trend line, I am still interested in buying it. I mean, it may show some weakness with the volatility in the market, especially through earnings season. But I mean, in the long run, I'm still bullish on gold. So here's the weekly chart. You can see it has shown a little weakness this week, and so it could potentially come back down even to this trend line. But as long as it stays kind of above this consolidation area, or at least near it, and doesn't cross down below this trend line, I think in any dip I'm looking to buy. And then silver. Silver was actually really strong this week until today. But if you take a look at the weekly, you see it's crossed above the two areas I was looking at. The first one, which is where we bought it, above the 1890 area, which is this pivot here, where it had kind of been pushing above, and then finally broke out. And then we bought some more over this trend line, downward sloping trend line here, at about 1930, and 1973 was actually the first target. It needed to break above this and stay above this trend line, but it hasn't, this pivot rather, but it hasn't done that yet. So it's still, it showed a little weakness this week. Let's just take a look. It was pretty strong, up until yesterday, until today rather, and it was pretty weak today. So, I mean, it could technically come right back down to this trend line or even this pivot where it broke out the second time at 1891. We'll again be looking to get into silver long. I have a really bullish view on silver too, but it is volatile, so it could easily come back down really hard as it did over here when it reached its peak. It's like kind of very parabolic, and then could come crashing down. This one came down to the 50. So let's see if it happens to come down. We'll look to get back in it or pick up some more. I don't think I'm going to sell silver unless it gets maybe below this congestion right here, this area right here. Oops. Here we go. So really, if it can, even if it gets back into this range, it's fine, so long as it stays in that range and doesn't go further down. So that's what we're looking at for silver. And bonds are still pretty strong. I'm not in them anymore. I've actually gotten out of my bond position, but honestly, they just look like they're bull flagging here. They did get above this prior double top kind of. Um, it's not even a double top, but it was the area that we were speaking of. It needed to get above in order for me to get long, which is what happened. I ended up getting long over here, and just for a couple of days, and actually sold out of my position. But it still has the potential to break out even further, depending on what the action is, right? So you still have low interest rates, weakening dollar. I mean, there's all kinds of reasons for this to be bullish, to be bullish on this. So it is, kind of a volatile pattern right now, but it has been grinding higher. So bonds are looking okay. So that's kind of a representation of the precious metals and bonds. And I will tell you, I'm still in wheat. Probably could have gotten out of a little yesterday, but it was a huge move yesterday. I've been in wheat since down in this $5 or at this breakout level over here about last week, I believe, end of last week. And as you can see, it's kind of volatile, but as it hit the 200-day moving average yesterday, it was an opportunity to sell. Actually, I did not take that opportunity. I actually missed it. Um, so I'm still in wheat, still profitable. Um, but 200 days proving to be a level of resistance. So we'll have to see what it does tomorrow. If it ends up going down below today's low, I will be selling it. So I'm actually pulling this up. I mean, yesterday's low, pulling this up to yesterday's low. So that's kind of my stop right there at about 535 in this area, right there. Oops, I have it on an oval. So right here is going to be my stop. And we'll go ahead and mark it. Let's see. I don't know. This is definitely not working the way I want today. Okay, there we go. So we'll go ahead and edit the properties and mark it as a stop. So that is where I'm going to stop out with a profit on wheat. I mean, I'd like to. I think it's got a ways to go potentially. And we're kind of just coming off the bottom here. If you take a look at the longer term chart on this, this is the weekly. Still, this is kind of a W plus bottom here. It's come down to this $4.80 area a few times, and I mean I really need it. I want it to get above this $9 area and break out, and I anticipate that maybe eventually it could do that. For the time being, just going to keep an eye on some of the levels that it needs to get above and stay above in order for me to stay long, which include these moving averages here, this 50 MA. I mean, these are curling over, so it could be potentially about to give another move higher. So we'll check on wheat. I mean, the commodities in general, they're pretty strong right now. Outside of wheat, we have. I wanted to just share with you some of the tech stocks. Facebook and Nvidia. Still short Facebook, even though it's pushing up on my stop right now. Let's put it on the daily so you can see kind of where I got in and just take a look at what things are, how things are going there. So here's Facebook. This is where I got short Facebook. It did kind of push up above my entry point. My stop again was this trend line up here, and then I pulled it down, like mentally. to this area over here around 245.75. So I'm going to go ahead and mark this. Actually, this is going to be my stop now. Now that this high has been made twice. If it does get back above that, that's really not a great sign. But you know, it's been super volatile. You can see how choppy it's been. I actually was able to sell some of my Facebook position the day after I bought it. If you recall, it went down in the after hours, and then pre-market it started tanking as well. And you can see here the kind of low it made. Let me see if I can get a 5-minute chart on this. Yeah, you can see here, it kind of started to try to go up, then came all the way back down, and you see it made a V here, right? I was able to get out some of my position, not at the low, but I did get out of some of it here in this area uh, as it crossed through that prior high and back into the earlier morning range. So I got out of some of it there for a profit, but I still have some left, like half of my position. So I'm looking to today actually looked pretty good too. I could have gotten out of it this morning. You can see it kind of went up to that prior like pivot high right here from the day before. It was kind of an area of consolidation. It came back up to that area, kind of crashed down from it yesterday. Overnight, the market was a little weak, and so Facebook was also weak. And this morning, it's just did the same thing it's been doing over the past months, is just ground higher, like as of midday. So, but you see, I had an opportunity to sell in the morning. I could have, um, but I did not. So I actually still have Facebook. Unfortunately, I didn't think it was going to get all the way up to this 241.26 area. It is strong in the after hours again. It's like gaining some strength, but you can see the end of the day it did tank along with the market. So hopefully it'll continue that move. But here on the right hand side, this is my yesterday's high will be my stop. So it'll I've already made money on half my position. So even if I stop out here, I'll be profitable, but not as profitable as I would like. So unfortunately, Facebook is showing some strength here after hours. It's up quite a bit, a few dollars. So looking for it to stay underneath this, and then targets would be, of course, this prior low here from the other day, um, right here, 232.20 area, and then the 50 moving average. So those are my targets initially for Facebook on the downside if it's able to break down back below the 20 MA. And then let's go to Nvidia as well. Nvidia is kind of a similar story here, but it's actually weaker than Facebook. So I'm still in my Nvidia short. My stop was going to be this 424 area, which is kind of around the time that it rolled over 3 days ago. I didn't get it till it was way down here. Because it reached up above this area in the after hours, I really didn't have any, time to, recoup my position because they're options, so you can't trade those in the after hours. So I didn't get stopped out of the position as it crossed back above this trend line. So I'm still in it, and it is weaker than Facebook. You can see it's actually still below where I bought it. So in Nvidia, I'm looking for pretty much the same thing, very similar pattern. Looking for it to break down back below to the low of the 14th. And then, you've got some pivots, the 20 moving average, this red trend line, and then there's some other, pivots along the way. You can see they're marked in blue. And then the 50 moving average is kind of the final final target right there. So those are the only positions I'm holding right now: gold, silver, Nvidia, Facebook, and I actually have a little bit of the S&P 500 short with options. So I'm looking to see what the market's going to do tomorrow into the weekend. And then, of course, next week earnings is going to be big. So we'll go over quite a bit of earning related trade ideas next week. because that's my favorite part. A favorite time of the the quarter is when earnings are reported because you really have a good opportunity post earnings to make some quick trades that are momentum driven and very technically oriented as well. So they charts, especially of the bigger cap stocks, really do move very well after earnings in the sense they they kind of are moving with the momentum to certain pivots that are already in existence in the chart patterns. I find anyway in many of the cases. So I'll be looking for that next week, and I'll be sure to share my ideas with you. So thanks so much for joining and for tuning in. Please click subscribe if you want to be notified of my next video, and I really appreciate your time and your attention. Have a great day and happy trading.